Hello traders, welcome back to Golgifx, and this is your boy Goji. So in this video, we'll be looking at trading the cap and handle pattern for best results. So you can add this trading strategy to your trading. If you're new to our channel, please like this video and subscribe to our channel to be notified on the coming videos. Traders, let's get into the video. The cap and handle pattern is a chart figure which has a bullish potential. The pattern could appear after a price increase or price decrease. So this pattern has its bearish form, which is the inverted cap and handle. So if you look at our chart, you can see this is a picture of the cap and handle pattern, and this pattern is a bullish pattern which gives bullish potentials. So one important thing to always remember about this pattern is that it can act as a reversal or continuation signal, and this depends on the price moves prior to the pattern formation. So let's look at an example of cap and handle pattern on our chart. So if you look at our chart here, around this point, we can see we have our cap and handle pattern being drawn on our chart. And we could see that we saw an impulse move of price, a correction, and then with that, we had the cap formation. After that, we can see the handle is being formed at the lower point of that. So what can we say from this? We can say that we could have a bullish cap and handle after a bullish price move, in which case the pattern will be considered as continuation as we see on our chart. So one important thing of this is that you should be able to identify the cap and handle formation. So looking at this pattern, you can see this pattern is being formed around this point, and with this, it's a good thing for you to know how to identify them. So as we started, I also mentioned the inverted cap and hammer, which is a mirror image of the standard cap and hammer that we are seeing here. So let's also look at that one. So if you look at our chart now, you can see that we have the bearish cap and handle pattern being formed on our chart. So with this one too, we mostly see it when we have a strong bullish up move to the upside, then we see a retracement to the downside. And after that, when price tend to give us a slanted upwards move, that is when we mostly see this pattern be forming, which is the bearish cap and handle pattern or the inverted cap and handle pattern. So now that you have a better understanding of the structure of these patterns, let's look at some trading strategy or how we will approach this pattern with some trade management ideas. So let's look at the inverted cap and handle trading strategy and the rules that follows this pattern. So if you see on my chart, you can see I currently have the inverted cap and handle pattern on my chart, and like I said earlier, anytime that you see this pattern, we mostly see it in an uptrend. As you can see, we see an impulse move, correction, and impulse move, and we had a retracement here, which gave us this pattern. As we see the pattern slanted upward, that is a sign. So when mostly we see this pattern, we try to draw. So if you're on TradingView, you have indicators that can draw this pattern for you. And the thing that we do or how we approach this trade is mostly if we see the handle being forming, we wait for a breakout from this point. This is what we wait for, a breakout from this point, and our first target is mostly at the low of the handle. This is our first target, and our second target is we look at the move from this high to this low and mostly use to target our second target. So that's how we approach the inverted cap and handle trading pattern. So anytime that you are trading and you see this pattern, you should be able to trade and profit from this candle. Let's look at the next one, which is the cap and handle pattern. This is the cap and handle trading example. So with this one too, you can see the market is also in a bullish move. We see a strong push to the upside, a correction to the downside, and we see price trying to move up, but it fails and give us a slanted price move to the downside. And with this, we're able to see that as we draw our chart pattern here, we can see it's a nice cap and handle trading pattern here. With this too, we will look at the same thing. We wait for price to break the handle. After that, we target the size of the handle, the first point here, to be our first target. And also we look at one, you can look at the size of the handle for our first TP, which can be drawn here, meaning we are measuring this one and we use to target our first TP. And also we use the size of the cap, which you can see here, to target our second TP. So that's how we trade the cap and handle pattern. So to be able to trade these patterns very well, or to be successful in trading this pattern, you have to follow some specific rules when trading this pattern. And the first thing you should look at is when you see a cap and handle pattern being formed and you want to take a trade, the first thing you have to do is, if the pattern is bullish, you buy when the price break the handle upward. So you don't take a trade when price is still inside the handle, because the market can continue to push in that direction. So you wait for a price to break the handle, then you look for your trade. The next thing is, if it's also in a bearish pattern, to sell, you have to wait for price to break price to the downside before you'll be able to take your trade. So these are the rules that you should be looking at when trading the cap and handle pattern. The next one that you also have to check is to put a stop loss. You always have to put a stop loss when trading. So with this, you put your stop loss below the handle if the pattern is bullish. You also put your stop loss above the handle if it is bearish. So one thing that you should always take important and you should take notice, the stop loss is very important. The last one that we'll be talking about is the take profit rules. So always when trading, you have to get target 1 and target 2, and with your target 1, it should be equal to the size of the handle after the breakout through the handle. So anytime that you see a cap and handle being formed, you look at the size of the handle, and that's where your target 1 will be. And to find your second target, you can also look at the size of the cap, you measure it, and you use that one to also form your target 2. So if you look at the chart here, this chart describes everything that we said here about your stop loss. Let's say if this is the trade that you are coming to take, you wait for price to break here. As we see the handle being break, you place your stop loss below this level, and your target 1, you can use the handle to measure to find your target 1, or you can use the cap to find your target 2. So traders, that's all for this video. I hope you like it. Please like and subscribe to our channel, and see you in the next video.